Mic test, mic test. Okay, I think we're good. All right. Seems a bit loud to me, but that's okay. Happy weekend. I hope you guys had a good trading week. I hope you all sized down this week during volatility. If you're new to trading, you probably sized up because that's just what happens. Um, you know what? Let me start with a different screen real quick here. Get my treadmill going here. Okay. What's going on, Charles? What's up, Bradley? Hmm. If you guys are just here, if you guys don't mind hitting the like button, it does help. Afternoon, James. What is going on, Dirk? Dirk's still powered to the max in his I don't know, what is that? What color blue is that? I don't know. Cornflower blue almost. Anyway, hope you guys are having a good weekend. I hope Thursday and Friday treated you well. Um, uh, what I have up here is a weekly TPO chart. And I'm going to start with why it's important to chart on the weekends and have big levels with hypotheses that come from maybe deep analysis of the markets. So this note here says quite clearly, and I haven't changed it since, I don't know, over a week ago. It's when I put it up. It says 522. So it emanates from the week of 522, as you can see here. Well, looks like it emanates further back, but essentially what I did on this when I created this was I merged it. Oh, excuse me. With the prior profile. And looking at this time node and then the volume over the top of this, based on prior week's activity, if we lost this level, my thesis was because you're losing, let's see if we could, because you're losing essentially, we'll call it 3 weeks of balance up here. If you lose the time and volume node that's right underneath it, so price could always, here, let's turn this on here. Price can always come down, hold the volume node, and then shoot right back in. But, let's see. If it lost the volume node, we'll undo this merge real quick. Reset. We'll just reset it. If we lost this time and volume node without faking out and going back to the upside, my thesis was loss of level leads to 4K quickly. And what was the level? 4,048 to 4,054 based on this time node and this volume node. So if we lose this, we're going to shoot down to 4K pretty quickly. At which point, I thought around 3980, 3982, 3972, might be support. That's what I thought, okay? We went much further than that, obviously. But the idea is that you had some idea that the loss of this balance area up here, coupled with the price action leading into it, gives you an idea that it's not just balance rules. Oh, break out of balance and straight down. It's all this thinly traded structure that if you start to come into this area and you have all these people long from here, right? Time and volume, that the longs are essentially going to start, they're going to say, I need to get out of Dodge, right? Coupled with all the folks this from here that are also going to be wrong. So if you're long from, say, down here, maybe you're adding in here, right? So maybe your average is somewhere in here. So if you have a catalyst, CPI, you have structure, you have balance, and then you have hardly any volume or time spent below the market, it's a perfect storm for downside, which I couldn't understand last week. How many people were wanting to step in front before this zone? Now I could understand if you stepped in front at 39.80, I get it. Makes sense to me. But just stepping in front below this level, I didn't understand that at all. So it's really interesting to me that we can have analysis on our charts from the week before, and that it can really help you. And you're like, okay, duh. Okay, so let's do something. Let's go look at the low time frame and let's analyze how we would have looked at it in real time. All right, let's go to this chart. And so the charts we're looking at is going to be this one. So the footprint chart you see up here is just my whole footprint with time and sales on the right. I've kind of reconfigured this a little bit. And then this is a 5-minute chart with all the various multiple time zones, and it's got a visible volume profile on it, and then intraday all the various volume profiles for Globex and for RTH. And it's got all my settlement lines and TD Ameritrade VWAP, value area high, value area low, 10 and 20 SMA on here, right? Volume point of control, value area high, value area low. And then this one's just a 30-minute RTH chart. Okay, so I look at these 4 charts and this one over here. Actually, if you want to know how this goes, you're like, how do you have it set up? Okay, so let me see. From right to left, this is number 1. This is number 2, and they're all in a straight line. This is 3, this is 4. So these are all lined up like that on a top of a 49-inch monitor. That's actually how I trade with it. You guys just see, it wouldn't fit on this screen if I lined them up that way. It would be just way too small. So anyway, that's actually how I line them up. So let's go back and let's look at the way that what happened on the note here, which just comes from this weekly TPO chart. So this weekly TPO chart here, this note right here, up here, is the note you're seeing on your small time frame chart. So let's go back and let's look If I can get my, I got a lot of monitors first here. Let's go look at this low time frame chart. Okay? And let's look right up here at this guy. Right here. Loss of this level leads to 4K quickly. It's now overlaid onto my 5-minute time frame chart, right? It's this chart that's highlighted blue here on your screen. Now, did price hesitate in other places? Yeah, above the gap, it hesitated. Right here. This is a 527 gap. This is the poor low from 6.1 and 6.2. So it hesitated here, and then boom, dropped through. Not much of a bounce, by the way, right? But this note was on my chart when I was even live streaming, and I kind of pointed it out. I'm just trying to point out the importance of charting on weekends, guys. Right? I don't post all my levels from weekends. Right? I put all this work in on weekends, not just to say, here you go, here's all my levels. Drinking the last of espresso here. So anyway, what happened when we came to this level, which on the weekly, we came up, and then we have a big sell bar right through. But what's important is as you lose that node, what happens? Comes through, retest. You're like, Mike, come on, so many little bars. But look at how quickly this market sold through. Look at that. The note is it leads to 4K quickly. Where do we get? We get to 4,000, I don't know, 16 near the close. And then what happens overnight? We get this stupidly tight, stupidly tight consolidation. Here, we'll look at the whole, look at that. Consolidation leads to expansion. That's just how it works in the market. Why? Because the more you consolidate at a zone, the more you trap one side or the other. So if the price breaks from that area, it tends to lead to explosive moves. And I mentioned this to somebody when this was happening. I said, the longer we go sideways here, the more, if you're short or you're long, doesn't matter which way you're positioned, the more you want to let this thing run if you're in the right position. Chris says, I'm running out of levels to the downside. So, when you have a zone that has traded for a long amount of time, when it eventually breaks out, you want to be thinking hold with the direction of the breakout for as long as trend is up, right? Higher highs, higher lows, or lower lows, lower highs, trend down. And it's like this with markets on a higher time frame too. If we're in a bear market and we're headed down and we eventually create a massive range that lasts, 2 years, 3 years, and we break to the upside from that range after prior multiple attempts, you should not be selling as we break out. You should be holding for a multi-year bull run. So we can extrapolate that and apply it to lower time frames. The greater the consolidation the greater the breakout. Conversely, the longer the consolidation without say a washout of traders. Let's just say, right? We figure out how many traders are trapped in this region here, right? Let's do something like this, okay? Oh, let's go like that. Did it work? Did it not give me the total? Oh, it's supposed to give me a total underneath. Bummer. Failure high, failure low. Oh, I need to adjust that. Oh well. Let's say we figure out how many traders are trapped here. And this was, let's say, multiple days. This is why BBWC works. BBWC is the idea that you have sideways consolidation and that when you come back up after a big move down, right, when you come back up, this will act like short-term resistance. You're like, well, that's basic, Mike. Well, you can apply the same thing to intraday structure, right? You have a breakdown here, and then you have multiple rally attempts that fail. And look, we come right into VWAP, TD Ameritrade VWAP here on the E-mini, and we come back into this first consolidative structure, the first one, and what do? Boom, major sell-off, right? So pretty important to be able to determine larger levels on the weekly to be able to trade around and to give you perspective on what's happening in the market for that week. That way you're not caught with your pants down trying to fade every single downside move like we had here, right? How many people were like buying, getting wrecked all day, right? Every time we'd break a level, you get long and then get wrecked short term. You buy a level, oh, breakout, wrecked short term. That's a little more tricky intraday. But I'm trying to highlight the importance of spending some time on weekends, kind of figuring out what potentially may cause the market to move from one level to another, right? So here on the 30-minute chart over here, on this chart, this is the 30-minute, we now have gaps right here. Big gap. Well, that's going to act, remember, if you go back to the weekly, just bear with me here. This is now all not very highly traded. So let's go back to the ideas of trap traders, or the idea of trap traders. When you get volume and a lot of time spent at a level, you have traders that are in profit, and you have traders up here who are also underwater. So what ends up happening? What drives price back to the edge of this zone? It's the traders that are in profit having to what? If you're short, you got to buy to get back, right? So what drives the move out of the zone? Right? If you're positioned short here, you're already in position. What drives the move out of the zone are the longs that are wrong at the edge, who start selling at any cost. And it drives the market instead of in a fairly sort of stair-like manner. Instead of that, it drives the market in a ruthless gap down manner, right? Now the longs are saying, get me out at any cost. Now, on Friday, do you guys remember what we had? Here, let's go back real quick here. Turn this off. Let's go back to this short time frame chart. Now let's go look over here at this volume. It's right here. Let's see, 500 volume chart. This is a heat map down here. All day on Friday, we had a large player with 160 contracts every 2 ticks getting filled on the way down. 160, right? We had market by order, right? Which is this, which shows us size on the book, individual orders, and it was 160 every 2 ticks from, let's go look. Oh, we still have this draw volume profile in. All right, let me go move this real quick. Look. They're like, what is this craziness that you talk of? It was right here. On the way down, this player was filling here every 2 ticks. 160 contracts. Now, is that somebody covering short? Maybe. Is it someone going long? Maybe. Does it matter? We know what drives price out of the balance that's overhead is players who are wrong, because they sell at any price. And there was a 2 or 3 week, essentially, or 3 weeks of we'll call it distribution now after the fact. Players position wrong. Plus there's a catalyst, CPI. And so they're getting out at any cost. They didn't, I mean, yes, did everybody buy the dip because of this liquidity? Did it absorb a lot of intraday shorts? Right? Short-term players, right? Of course. Absolutely. Right? You had this stair-stepping all the way down. But as you see, this individual, as they're filling, they left orders here. Notice, though, as they fill, so look at this. You notice this air pocket underneath each time? Look, it's a systematic covering as the market rallies. Okay? You see this? Get to this level, it doesn't extend forward. They left liquidity in. But this level here, 1, 2, 3. 3 times 160. What is that? 480? 480 contracts removed. Maybe covering into the rally a little. Came back down. So it's a fixed quantity that they're covering. Came back down, right? 3 tranches of orders lower. Fill. Okay? Came back down. Fill. 1, 2, 3. Again, 1, 2, 3. Pushing market up. There's an iceberg here. Liquidity. Holding structure. Came back down. Fill. 1, 2, 3. Again. You guys seeing the pattern? The Discipline says, probably the plunge protection team. Very memeish of you, Discipline. Very memeish. Possible, my friend. Possible. But I wouldn't get too distracted by Discipline's comments, right? We want to be systematic in how we're observing the market. and just notice patterns. That's it. As technical traders, that's all we're trying to do, is amass the greatest amount of relevant technical information that helps us with our trading and understand it. That's it. So anyway, big rally after a ish ton of absorption. And again, 3 levels. Left in. Look it. You notice the patterns now? 3 levels. Left. Filled. Now look. 3 levels. So, as the market starts to rally, likely these are getting lifted and hitting the market again. All right, so let's keep looking. Aha! 3 levels underneath again. 1, 2, 3. Did it ever fill? Nope. Look, it goes to what? This time, 10:30 or 1:30 Eastern, and now that liquidity is removed at this time in the day. But they left the lower in there. Now let's go look and see what the market does. When they're lifting their liquidity, oh, sorry, move this down. Okay. Right there. Now, let's go look at market structure. You guys realize this can really give you a good idea about how bigger participants may think about the market. What is happening? Here, let's change this to 1,000 volume. I think it's 1,000 volume. I hope I didn't hit 100 volume. I might have. Nope, 1,000. Okay. Notice the difference in price action? You guys, just what I'm explaining to you and showing you right now is worth the price of admission here. This is really, really important for you guys to analyze, turn your brains on, and think about what's happening in the market. Okay? Not just sort of say meme-ish things about the market, or like, yeah, well, maybe this, maybe that. Actually use the data in hand to determine how somebody else may think about the market. Yes, I can always say, I don't know. That's always a given in the market, right? But there's a trail of information that's left behind here using the tools that we have. And the tools I'm using, Sierra Chart, by the way. If you want to use Sierra Chart, if you're watching this video for the first time, I would appreciate you using my referral link in the description. It won't cost you anything, and it helps me just a little bit. I don't get any money. You just help pay for my Sierra Chart usage. So it's like a little thank you. So if you're signing up, and it lets the people at Sierra Chart know that I'm bringing people to their platform, and that can be useful because if as a community we then request features, and I go to Sierra Chart and say, hey, I have a community of users that's interested in this feature, they'll know, hey, TYP has brought whatever 100 people to the platform. Maybe that's relevant that we try to implement that. Okay, so that's benefits everybody all around. Okay, so let's look. Markets now moving down, right? We could say this is some sort of channel, whatever. It's sloppy, I know. Now the market's changing direction a little bit. Notice as this market starts to make a higher low, these orders from this point, they decided to pool the liquidity. And what? likely hit this market as it's potentially moving sideways. And we know, follow the story, we know that markets change trend in one of two ways. You get V reversals, or you get momentum loss. All right, so you get sharp rejections and you get momentum loss. So as this market starts to go sideways and doesn't sell off below 3,900, what does this player do? Pools the liquidity. The market, at the point they pool liquidity, starts to rally. See that? But what is it rallying out of? It's rallying into the range that's created down here. We get just outside of the range, we come back in. But notice, the market's now trying to turn the boat. It's only trying. Notice here that some of this liquidity starts to get pooled in here. Again, it's 160 contracts at every 2 ticks. It's what it was. If you have MBO, you saw it clearly on the order book all day. Okay, so I'm going slow, kind of trying to be methodical and spending some time. Now look, this one still exists. Into the close, into settlement, essentially. Notice. You're like, what is this, story time? Yeah, it is. Into settlement, right before settlement, as the market starts to rally or move down, they don't all pull at the same time. Look. You see this? How the market depth historical graph is showing they're getting pulled from here, here. Here, make it change the colors. Right? Getting pulled from here, then here, then here, then here, then here. This represents time in this direction. And so the ones at the bottom, in time at settlement, settlement is what? Where the big players play. It's the last 30 seconds highlighted by this orange zone. This orange transparent background prints only during the last 30 seconds of the trading day. So into settlement, into the weakness, this player started covering. You notice that? Or going long, or whatever it is. Now, it's interesting that they covered or pooled liquidity and the market rallies here. Now, what can you deduce from this? You can deduce that as the trend potentially changes, this player is getting out of their short potentially. Now, what do we have next week as a catalyst? FOMC? All right. Let's look at the higher time frame. The higher time frame is this weekly chart that I still need to go turn on. Take my ES weekly TPO. I have so many scenes now, guys, to make this work here. So it's it's new for me. So just bear in mind I'm navigating it slowly. So here we are, right? Look at all that time and volume here. Look at that. This market, this is not a This is not a very standardized distribution here, right? Big gap doesn't include the overnight, right? This distribution is like, right? If this player has been covering from up here, this one big player, because it's 160 lots, or we could just assume it's misdirection, and that they know we'll assume that it's maybe a bunch of different players all copying each other because they think it's funny, right? You can assume any number of things to make your hypothesis true in your mind, but less probable. It's probably all the same player, okay? And we're going to think of it like that because we see that the liquidity pooling actually makes sense, doesn't it? As we potentially rally, they pool the next 3 tranches, the next 3 orders for 160 lots, and they cover them into the rally because they don't know the future. Nobody knows the future. They're like, yeah, J Pound knows. Okay, maybe J Pound knows the future, but even he doesn't know the future. We trade probability. We don't trade thinking we know what's going to happen, right? So we assign probability to something, but when you're on the hard right edge of the chart, it's a little different, right? If I knew the future, let's see. I would have, let's see, we'll turn this off. If I knew the future, I would have come in here. Let's see if we could do this. There you go. There's the, it's not that clear. I think I need to turn the color from black to like blue or something so that it highlights. Anyway, if we knew the future, we would have been like, load up the whole account here, every single account, and short it. Just, and we had, hey, will likely lead to 4K quickly, but, and people like to talk like, oh, well, if you knew the future, or if your charts were so good, you should be a, trillionaire. Come on, guys, let's be realistic. Your local furu who says, look, break this level and we go all the way here, they aren't betting the house. They aren't. But it is useful for your day trading to try and get on the right direction of the trend. If you have big levels on your chart. So anyway, back to this player. Pulled all the liquidity into settlement. It's no longer here in the market. That's really interesting to me. Notice this is brighter red because somebody was adding liquidity down here at 38.80. And that's why some of these levels are brighter red. But I know using MBO, it was 160 lots, right? And this chart using market depth historical graph highlights anything greater than 150 as the lower end of the range for background, and then anything that's purple is 400 lots. So you have these areas where they're adding more liquidity, which happens to be here and here, and again here at this point, right? So they were expecting potentially for the market to come back into this level and make a lower low, and you notice here, right, that as this market, I find this endlessly fascinating, guys. As this market rallies and the preceding price action, as this market rallies the first time, and the preceding price action is a strong trend down that continuously makes lower highs, they're expecting here, adding this liquidity to get maybe filled here. Then it doesn't happen. You get this little double bottom, and then we rally. So you see the uncertainty in market participants going, we got this strong channel, and when this channel or direction starts to break, right? This channel and direction starts to break, the behaviors of participants expecting more downside changes, right? Liquidity removed. And now these channels are broken. We're starting to go kind of sideways. And this player about here decides, well, time to cover some more, and the market rallies, right? Time to cover some more, and the market rallies for all this time. And you're like, wait, we can't track big participants. You know, sometimes you can have an idea. And it's also useful for you to recognize that whoever this large trader is down here, this is how they think about the market. Is that when this market goes sideways, all of a sudden, they're thinking, maybe I should cover a bit. And then into settlement, when the market comes back down to about the level that they pooled, which is here, they again covered. You see that? It really, there's a lot of information here that you can, there's a reason Friday I didn't come online. I'm just trading all day. Focused on the market, 100% focused, because there was a lot going on. But really interesting. And look, if we're just looking here intraday, I really enjoyed this market. Look at when this market starts to sell off on Friday. Right? Boom. Right? You have this very tight trend, right? This channel. Boom. And these moves where you're just getting, people got obliterated, myself included, right? If we're going to be 100% transparent here, I got bent over in this zone. Whoever you were covering, every time it came back, I was getting smoked on my stops through here. Can't tell you how many NASDAQ points that I lost here. Ugh. Disgusting afternoon Friday for me. Like, I called it right from the level on the NASDAQ, from the upper, but then trying to play in this area, very few winning trades. There's a lot of losing trades on the NASDAQ for me, okay? So let's not sugarcoat it and make it seem like, oh, professional trader, you have a YouTube video, you don't lose. Pfft. You kidding me? Tail between my legs through this whole area. This was not easy trading, right? The NASDAQ, when it rallied up here, I caught the short at 72. I only held for maybe 15 points per contract. When the NASDAQ dropped 100 points into the close, and I held for 15 points. You know how disgusted I was with myself? After all the losing, then chop here, and I caught the NASDAQ short. It dropped 100 points. Here, I'll show you. I'll show you where I got my shorts on the NASDAQ, and where I really failed. Now, I'm not trying to turn this into an intraday analysis, but these things are related. The intraday and the weekly, because these are big levels and big moves. And I'm going to try and bring this all back together by the end of the video. I haven't looked at any comments yet because I'm just talking methodically, slowly about the market. It's probably to your benefit that I don't get distracted with comments. All right, let's go look at the NASDAQ real quick, so you guys can see where I got bent over. All right. By not taking the profits, not riding the trend. My height side trading was bad. What the heck is this? Okay. All right. Getting emails. I'm getting emails and I'm getting texts. So a little distracted. Okay. So you see this right here? Wait, let's see. 8, let's see. 74. Rally. Yeah, it was right here when we. Let's see. Let me see. 50 volume. That's not enough. 72, 64. Nope. All right, we need to change this to 200 volume. Man, when you have so many charts up, so much to adjust. Okay, there it is. There's the 72. Okay, so here, let me make sure I'm on the right tool again. Bing. Okay, so this red zone comes from here. You see this? This zone is drawn because of the 5-minute chart right here. And I mentioned it on Twitter. I was like, if you could get a short here, it was a great short, but you had to step in front of the train. And it was right here at 11,972. So that's the 72 I was talking about. I got in 72 right before the close. So these are 5-minute bars. 1, 2, 3, I don't know, 25, 30 minutes later, you're up 100 points. And then this is settlement, right? On the NASDAQ, way down here on the orange. I got that short and took just a tiny little winner. Tiny. Oh, God, it's so disgusting. After losing an F-load of money through this area. Like an F-load. Like I was wrong so many times. You know me. I'm like, I just keep trading my edge. And I was like, are they feeding my positions to people? What the hell's going on here? That's what it felt like, okay? I got this one. Took a small winner. Yeah, I know you can't beat yourself up. I see one comment. Anyway, not reading the long ones yet. Sorry. You guys can talk amongst yourselves. Anyway, so this is the shortable zone. It's BBWC. It's also prior swing low. The market came down, tested it, came down, tried to break down, came down, tested it again, and then rapidly sold off on size. So when we came back to this zone, I thought, well, it's at least a great scalp. At least. And you could see that this, by the way, this volume profile is for visible bars only. And the reason I do that for this volume profile on the right side to be visible bars only is because it gives me fine control over looking at what the volume distribution is at levels. Now, these are volume bars anyway, so I know that every one of these bars is 200 volume. Okay? And so that tells you time because it's stacking bars at 200. And it also tells you consolidation, what's there. So you would know that this is high volume just because it's tightly stacked through here and that every single one of these bars is 200 volume, right? It's not like a time-based candle where it could be 1,500 contracts or it could be 400 contracts, right? You know every single one of these is 200. But this is useful to be visible bars only for the purposes of really analyzing what went on here and having a very good idea. Okay, so you could do something like this and see. You see that? The last time from the most recent price action, the volume, the last transacted volume has its pinnacle right here at 70. So that's why I find it incredibly useful. You see that? See, it gets a little wider here, and it's right here at I guess it's at 69. Sexy. All right. So I got that short, 72, like perfectly into my zone. It was pre-drawn. Already up on a chart. I was waiting for it. I didn't even get 30 points. I mean, just so disgusting. Can you see where I took my 15? Into this zone here. Right down to here. And that's it. And I thought, well, this could hold as support and rip to the upside. And then we down, down, down. I was kicking myself when we were down here. And then I thought, when it rallied back up and then it rejected around 618 here, I was like, oh, son of a gun. Went just past 618. You're like, what are you talking about? Fibonacci retracement went just past 618. I have a captive audience potentially here. Hey, if you guys are watching the video, please like the video. Anyway, that's what I'm talking about. Just above 618, trapped some retail folk, and then sold straight down. Went up again, trapped more people, and then this sell right here was so... I took shorts in here because I noted the behavior of the price action, and I kept shorting, scalping out, shorting, scalping out, shorting, scalping. I was like, I made a few wins through here, but the whole time all I could think about was, I got 72, and I didn't hold it. And when it was down here, I don't know, at 872, there came a moment right in this zone here that I realized I just a few minutes ago had a short entry from 100 points higher. And the narrative in my head was, and I'm kind of just admitting hindsight, it was all those people that let winners run and preach let winners run, they're right. I'm such an idiot, right? You got to realize I was losing back in here. All I could do was second guess myself at this point. Trading is hard, guys. It's so easy. It's so easy to look hindsight and beat yourself up. But this one, tell you what, I was patient. I waited. I got in. I told myself I should at least let some go. And then I didn't. And that's, you get so cucked from prior price action and losing psychology that instead of going, you know, I'm just gonna play the way I know I should play, the recent losing gets to you, and you go, you know, instead of playing the right way, I'm gonna try to alleviate this emotional pain that I felt from being a sucker all day and getting stopped out even when I was quote unquote generally right. They just take it a little further and find my stop, but you gotta stop somewhere for the size you're playing. And I mean, in hindsight, hey, should have shorted, because I was shorting a lot. Should have shorted higher highs and then covered into prior high structure, and I could then scalp even while it was wrong, thinking, okay, we're going to get continuation into the close. Hindsight. All right. And I figured that out at about this point. I go, you know, instead of shorting in this zone here, and then, okay, I'd be right for a short amount of time, I wouldn't move my stop. Like in here. I was wrong right in this little zone here. So I'm just going to talk a little bit about my own pain. I was right. Oh, we'll call it here. All right. I shorted it. So this is structure breakdown. I would short right in this zone here. And then stop would be somewhere up above here, right? So I'd be short from, I don't know, 28. Stop into, I don't know, up here somewhere, right? And I would leave it for the break of this channel so that it, you know, okay, make new lows. Market would just be oscillating here. And again, I'm playing against this structure. And you could say, well, you should have your stop way up here. All right, and yeah, in hindsight, that's what I should have done. Thank you very much. But my structure, the structure of my trades was something like this: stop in here, entry here, looking to take profit around 1.5 hours. So you could see this is what would happen. They go up, they get my stop here. Sometimes when it would just pull back, go up, pull back, go up, I'd stop myself out because I was like, well, I'm wrong already. I just stop out for this loser here, and I would think, oh, well, small loser. But it happened so many times. Felt like a complete novice on Friday during this time. Anyway, so then I finally get this move and I get short, but it's after a big old rally, and then I don't hold it. And I changed what I was. See, here's what ends up happening with trading sometimes. You get a little bit of a little bias. You're like, and it's the right thing to do. The right thing to do is to say, how is the market moving? And how can I quit being wrong so much? So I said, big rally, pull back, big rally. All right, this might be another big rally, but it's into a potential big area of resistance. So instead, my stop was up here, and I'm in here. So instead of not taking profit, I'm going to take profit at like 1.2 Rs because I can get 1.2 Rs based on my entry. And so I did it here, and I was like, oh, yay, I'm a winner. I made up some of my losers. And then it rolled over. So about the time, and this is like into the close, last 30 minutes or so. All right, M period starts somewhere, right here? So this is M period, 12:30 or 3:30 Eastern. So right about the point where I said, I think I've got this thing figured out, I did. And I said, well, shoot, coming into the close, but I'm using how the market's moving, and I'm gonna start taking profit where I don't lose it. And then the market changes its behavior, and I don't get the winner, the big winner that I was planning for all day. So you see, I change my strategy. And the moment I change my strategy, the market goes and it does the thing that would have gotten me a big winner, and I would have had a nice fat winning day. Hence, trading is hard. Now, is it useful for me to talk about this? Right? Is it useful for me to tell you about my failings? It's useful to me because I'm galvanizing and I'm analyzing how I traded poorly so that I can be aware next time. Because in the moment, I was emotional. I was unhappy. And I continued to trade. My wife told me, walked out at a certain few points, and I told my wife, I was like, this is what just happened. She's like, babe, you're kind of tilted a little bit. I'm like, I'm actually talking about it the way I am because I don't want it to be that important. So I'm kind of telling you all about this so that I kind of alleviate some pressure. But I actually feel okay. And I did. I felt okay about the prior losses and everything. And I was like, yeah, I'm just going to keep playing because I know my edge, blah, blah, blah. But I share this because at the hard rate edge, when the market is changing its behavior, it's easy to beat yourself up, and it's also very, very difficult to look at the big picture, look at the small picture, look at the general market structure, and recognize, all right, I'm playing this level because of a larger level, because of higher time frame. And then sort of pivot to this setup is because of high time frame and low time frame, and therefore, because it's a larger structure based off the morning, I should be looking for a bigger winner Whereas before, it's just range. And I always tell people that I talk to about trading, always asking me, Mike, what's the most challenging thing for you as a trader? And I'm like, 100% every time. I've said it for a long time now. It's adapting to market conditions as they change, right? It's adapting to how the market changes its personality short term. It's that moment where you have to flip it. And because it's in those moments that you don't get your bigger winner or you have a bigger loser. Because all of a sudden the market has changed its personality. And if you're trading same size, you might get slippage, you might get, if you break your rule just a little at that moment and try to average down. Let's look here. You tried to average down thinking we're still higher lows, higher lows. You got absolutely body slammed. We're looking at this 5-minute chart here. All right, we'll just do that. You can see where I'm at. You got body slammed through here. If you tried to average down, you probably eventually stopped out in here into the close and you're panicked. That's what happens to traders. That's what really, really, really happens. So anyway, I'm going to go back and read some comments here. If you guys are on the channel, haven't liked it, I would appreciate if you could like it. God, I hate saying these things. I'm just reading comments, guys. That's the reason for the. I have a lot of comments that I missed. 3D 3 do 5. I could barely see the font, but the journey is the destination. That's right. It's the process. I do this stuff every weekend where I determine levels. And if this then that. And they tend to always give me very, very good intel for the week. But it's not something that I share with people all week because I put so much work in on the weekends. And it takes me so much more time to talk about it. And without context, it doesn't make any sense. So I do put the work in on the weekends to make all these levels. If you guys wanted me to do a trade plan or something for you, then I would have to charge for it, and it'd just be one of those things that I'm not going to babysit people on. So now, if you guys are interested in that, shoot me an email. But right now, and a lot of people have asked me for that for a long time, but I don't know that there's enough interest. So if you guys are interested, shoot me an email. If not, whatever. I just won't do it. So it's one of those things. I do this work anyway, but I'm not distributing it out to the whole world. Plus, a lot of these levels are very, very zone specific. So if I'm putting this out on a YouTube video, if even 200 of you are considering buying the same level, it can make a difference on how good my entries are. So, if I were to ever do a trade levels thing, I would max out the number of users that could subscribe to it. It would not be like, oh yeah, I'll sign up 1,000 people at X number. I don't care about. I would only do it for first come first serve, first 25 people, first 50 people, maybe max. I have to think about that, but I won't even think about it unless a bunch of people reach out to me and I'll say, hey Mike, we really want you to do this. Otherwise, not happening. I'll share with you guys how to fish on these videos, and you guys can come up with it yourselves. I think that's more valuable. A lot more valuable. So, in my opinion, all of you should be trying really freaking hard to try and expand your knowledge through all the people in your sphere of influence or who you follow or whatever. You should be trying to learn the various methods and putting the work in yourselves, because there's a lot more to be gained by putting in that work. So I don't know. That's my honest opinion on that. All right, let's get rid of these levels here. Boy, look at that gap here on the Nasdaq as we fell through it, and we got a big old gap here. Anyway, so the way that this works, now that I've talked enough about all this. Here, hold on. I'm just cleaning up some of my charts here. All right. So the way that this works is I have my higher time frame charts that I overlay levels to lower time frame charts. Anyway, let me read some of the last few comments. Yeah, Brian Gardner. Brian Gardner says, volume is funny last week. I think that large institutions are rolling long-term positions into new contracts. Yeah. Perfect storm of odd conditions. Some are rollover economic strangeness. Yeah, they are rolling lots of sides. It's exactly what's happening. Now, keep in mind, though, that all of the size that rolled was on M, the 160. This is all U, right? So what you guys are looking at is the U contract, what will be the front month Monday, but this 160 was on M. These are just continuous volume based, and it's still showing what occurred on M. So it's a little confusing, but anyway. Rob says, "Oh my, that psychology was the same for me." Yeah, Rob. We all fall into these things. So we can relatively delta neutral. It's funny, James says, speaking of long-term hedgers, JPM hedge. Unless you know somebody at JP Morgan, James, I doubt what they're releasing to the public is 100%. I was mainly trading NQ, HZ. All right. I read all the comments. Okie dokie. So, first things first. After all that, first things. I wonder if I'm even going to get through this, guys. Because, what, I've already been talking for an hour? See how I can go on all these side rants? And it takes me so long to do these reviews because I end up talking about other stuff. So, first things first. Let's go to this weekly TPO chart of the E-mini. All right. All this stuff to the upside, kind of unimportant to the current. You're like, but I want to know above. Yeah, well, again, that's all stuff you would get if you paid me, but I'm not going to just. So I'm trying to share the process a little bit today, and that's about it. I will eventually go mark these up and the short-term time frame charts with very specific tradable levels for me. But I don't really want to put all these short-term little levels for everybody else to get in at Globex or to get in at the RTH and trade specifically around that level. So the takeaway for this video should more be about process, right? Not, oh, well, TYP has this level on a chart. That comes later for me. And it's like I was talking to Timmy, at Trades Timmy on Twitter, my buddy. And I was like, Timmy, I don't put all this stuff on the chart for the whole week. He's like, you should, man. And you should charge people for it. He's like, you're way better than all the other people that are doing it. I'm like, no, that's a whole lot of work. So, again, I won't do that unless a bunch of you all reach out via email and say, Mike, I'm interested. And then I'd be like, okay, well, let's gauge it. If there's a whole lot of interest, then maybe I'd do something. But it'd be first come, first serve. And it's kind of like that dude that, what was his name? I used to follow him on Twitter back in February of 2020. It was like SPX trader or something. He's a futures trader. He had some good levels. And he was like, you know what? If I'm going to do anything, I'm only going to limit it to X number of people. I would do the same. Right? But I would have to gauge, see if people are interested. Timmy's a wise man. Monetize your knowledge. I'm bad at that, my friend. I'm not good. I'm not good at even accepting. Yeah, it's a whole thing. It runs deep in my personal life. Gifts from other people or people appreciating what I've done for them just makes me feel bad. So it's just a whole thing. So if I did it, I wouldn't charge much, and it would only be first 25 people because I know I don't want hundreds of people all buying the same levels that I know produce edge. Right? Scalpable edge. Right? I just want to share the levels with a few people and make sure they all knew, hey guys, don't distribute this for your own good because you do not want to compete with other traders on these zones. Anybody that knows that's traded in the old Discord that does no longer exist knows that I get in very, very close to bottoms or tops. Now, I don't hold for the moves. I'm terrible. Well, not terrible, but I'm not great at holding every single entry. But I'm very good at finding extremes short term. Very good. But anyway, let's go back to this EW or ES chart here. EP on CQG. So what we have here is the weekly chart. And so what we want to look at and note is structure from prior weeks. Right now, this big volume node from this area is holding up the market. Man, I really don't like the fact that this is black. I'm on Linux. There's got to be a way for me to change this to like bright yellow or blue or something, so that I could like hit the control and then the color could turn a different color. But again, one of the things I need to go do some googling on with Linux here. Maybe once I get off stream, maybe I'll go fix it. Maybe for the next video, put a halo or something, where so you guys can see where it is that I'm pointing to. But all right, so this is what's holding up the show here. So the very last week where price traded down here was this week, and that was 522. On 522, the market simply tested down on very little volume and ripped right back up. What is actually holding up the show is the week before with all this volume here. So this green thick line is a volume point of control, and the thick white line here is time point of control, or TPOC. And so that's what's holding up this market. This market, time-wise, gap down, built volume right up against there, and essentially never rallied out of this zone. It tried intraday. We know that. It went up and it went straight and closed on lows. Now, if we go look at the settlement was quite low. Now, there's contract rules, so you got to realize that that's going to skew everything, right? You have contracts rolling from one to the other. And if you go look at the comparison, the Q and the U, I'm sorry, the M and the the M and the U contracts were pretty close in volume. So together we traded, I don't know, a little over 2 million contracts. I'm not going to try and dissect all that. I think there's not a lot of edge to be found in trying to figure out what they're doing at levels. But for example, I do know that here, let me so I'm not going to spend a lot of time, but I'll spend just a little bit here. I do know that up here in this area here, that the U contract was getting rolled in this whole area because the volume going into U here was massive. And there were moments where U in through this zone had a whole lot of contracts filling here to the downside. So huge volume when it sold, it would get filled much more than compared to the M. So the U contracts was doing big volume here, which is interesting because if they were rolling, so if someone, it's just kind of interesting to think about. If someone saw this big drop and said, you know, we're going to roll in here, and then CPI is out, we all expect CPI to miss, right? We expect it to potentially, everyone, it was widely distributed that CPI would be a little bit worse than expected. And so I think a lot of people were rolling, getting long here, which is another reason when CPI was even worse and it sold, that all these people said, out. It's even worse than I thought. And then you got this big gap that didn't even test in the morning. It was just like everyone expecting some sort of half gap or something, didn't even get it, right? Everyone just got washed out down here. I think that's what was happening, right? So when you kind of consider that, let's go back to this other chart here with what happened here. Gap didn't even get tested, and we built volume all the way down here against what was what? 1, 2, 3 weeks ago, it is very likely that we extend down. Very likely that we extend down. And then it's also very likely that a lot of this volume, which now has not, so the market spent time here. Oh, here, let me get rid of this. The market spent time and volume here on the way down here, right? And it then distributed time and volume a little lower. And then when the market came back through it, it filled in this volume. And then the rotation through here, very, very low. In other words, as we rallied overnight here, through here, all the shorts, it was their turn for pain. And we just ripped straight up, right? And then distributed a little bit more through here, right? Longs took profit. We gapped again. And all this overhead, right? We are now maintaining the downtrend here. So let's think about the rotations here. We came back, gapped through what was hardly any time or volume spent in this prior week, and now we're below this volume. We tried to rally a little bit in RTH, or where we started, a little bit of volume, and there was just nothing. A little bit of intraday rallying right through here, and then we closed near lows. You would expect next week to try and test this gap, but you would also expect to have some kind of distribution lower and test. Why? Because we're closing near this prior volume area, and we're building time and volume into this area without any real extension down here. Now, when we go to the daily TPO, we're going to see a little bit more of why that's relevant. So a lot of you might go, hey, would it also be normal to go fill in next week a volume node here? Well, right, yes. So you got to realize, through this zone, we built volume. And then the next week, we tried to go high, or tried to go lower, tried to go higher, then went lower. Then the next week, ripped back through, monster short covering rally, we could say now in hindsight. We distribute for a few weeks, but we rip right back through here. So we rip right through all the shorts, cover above, and now we rip right back through, and it's the long's turn. It's long's turn to get out losing money through here from these volume nodes. Okay, so the longs are in pain here now. Next week we have FOMC rates likely to be there's a lot of talk, a lot of fear being disseminated in the markets. Obviously, we have all of this is now overhead supply, right? We've made this monster gap down. To go lower and test this area would make a lot of sense. It would bring max pain. It would bring panic for a lot of investors. We've had all of these large cap stocks splitting. Now Tesla announces a 3-for-1 split right now. It's kind of a little bit of a retail sucker play, right? Oh, it's going to be Amazon, or Tesla's going to be cheap, right? Amazon is now whatever, 120, 110 bucks, whatever it is. I don't have toss up right now. I don't know exactly where it is. But, we have all these stocks splitting, right? Google, blah, blah, blah. All the retail people are like, it's cheaper now. It's really not cheaper. There's just more shares. So max pain, I think we're going to flush. We're going to test lower. On the daily, I think we have a poor low down here. You can almost see it. You could almost see it on this weekly chart down here. But we'll go take a look at it here shortly. All right. So we've looked enough at this weekly structure. This note goes away now. It goes away. It's no longer relevant because this was part of my weekly plan that I put in last week. Loss of level leads to 4K quickly. I think it was Gabriel Gabiozar on Twitter, a professional trader from Israel. He said, Mike, why are you looking for longs? I'm like, dude, I'm not. Look at my notes in the chart. I'm not looking for longs. I'm saying that the boat is trying to turn here, but my bigger picture, if you had seen any of my long-term charts, this was in the chart. We lose this level. I'm looking for a quick 4K price. I'm looking for it to scream to the downside. So that's what I was looking for last week. But this now goes away. All right. Bing. Erase the drawing. Oh, you know what? Let's see. Yeah. Okay. Huh. Thought maybe. All right. Hold on. Yeah, never mind. Looking at something here. Anyway, comes off the chart. Takes too long for me to talk through everything I'm thinking about. I'm actually starting to lose a little bit of a little drive to keep talking. I'm getting tired, guys. I'm getting tired of talking. It happens. This is so time consuming. You're like, but you're not done. I know, but it's just tiring. What's up, Pierrick? Hey, Chirp Tone. By the way, Dirk, I really appreciate you answering whoever it was that asked about sharing chart books. Thank you very much. And whoever else answered, whoever asked about it. I can't remember the names. All right, so let's go look at some more zoomed in levels here. Daily TPO. Okay, there we go. I didn't mod you so that you have to do anything, Dirk. I think Mr. H, I only modded you so that you could share links in the chat, but whatever. I trust Dirk. I don't care if he's a mod or he's not. Dirk is I don't think Dirk doesn't have a mean bone in his body. Right, Dirk? Anyway. All right, let's look. Hey, I even have notes here. Oh, cool. All right. Here we go. You see this red line? The red line is showing us poor low, poor high, poor low. So it's really a poor low. When it's red, it's a poor low. When it's green or blue, it's a poor high. But the name, won't differentiate between a poor low and poor high, right? So hence why I say poor high slash or poor H/L for poor high or low. But they do allow for differentiation in color on Sierra chart for the poor high low. Just not the name. So the name has to address both the high and the low. So What do? I go to my chart and I actually put it at the level of where the poor high or low is. You're like, it's Mike, it's not perfect. You're right, it's not. Maybe we should make it more perfect. All right, let's move it up. Right on top. Bing. All right, there you go. Now this is overlaying onto my low time frame chart. Let's go up here. You guys don't see what I'm doing, but I'm just going to go. All right. I've now zoomed in here on my 5-minute chart. You see that? See, this is where I'm at. This now is overlaid. And I say poor low, trap shorts. So we're coming into this zone. So the way I'll think about it next week is depending on how we get there. What if Sunday night we gap down? Okay. And then Monday morning we open here. Or we open up here at the naked point of volume point of control. That's NVPOC. We open here, we drift down, and we go foomp, and we go just a little lower, and we reject. How would you be playing this level right now? What's up, Mike? Mike Purdue. Nice to see you, my friend. Anybody? How would you play this intraday? Anybody have some ideas? I'll wait. A lot more interesting for me to hear what you guys have to say. I'm talking myself to death here, to be honest. Further down. Okay, so Chirptone says we're going to go further down. Mike says wait for responsive buyers. How? Where? What? How does that look? So if this is the poor low right here, that comes from the daily TPO chart. Whoa, down here, right? What might our opportunities look like? Okay. Right down here at 38.08. What are some scenarios that might, let's see. No, chop chop all day. Long after the rejection. What does the rejection look like? Rob? So I'm just trying to get an idea of what it would look like specifically, or some scenarios exactly. Reverse after fall back through. Rob says reverse after. So this is a scenario, I think, right? So Rob is saying we could, let's just say we get the over. So this is overnight. That's this yellow here. The X is the European session, right? This other X here is the Asian session, right? And then the European session goes all the way to RTH. Okay, so let's just say price is falling. Europe, it does something like this. And then the open occurs, and here's the, I don't know, here's the RTH open, okay? And price is here, right? And we come down, we bounce on this naked VPOC. We go a little like this, and then we come down, and we come here, and right near the bottom, we bounce really hard right there. How would you want to be playing it? Price has just bounced up here. How would you want to be playing that? Second Higher, low, long, Mike says. So Mike says if price comes down, whoosh, and if you make a higher low here, get long. Right? Right, Mike? So if you make that higher low, get long somewhere here, maybe a stop underneath that low, targeting another leg up, right? Is there any kind of volume that needs to print here for you for this scenario? Pierre says, wait for major resistance to break first. Remember, the scenario is this blue thick line here is the RTH open. This is 6:30 a.m. Pacific Standard Time or 9:30 Eastern Time. And price is this red line. It's moved up and down. It's bounced on this naked VPOC already. It's consolidated and it moves down. It goes to the poor low and it bounces up to right here. So you definitely need volume there, says Chirp Tone. You need volume where? Here, coming into this poor low. Volume building at the low is bearish. Okay. So volume builds, say, at this area, it's bearish. Now, what if price moves very quickly, like this, and then very quickly rejects and builds a lot of volume here, then pushes up? So we have this short term, we'll call it a B profile on we'll call it a 15-minute footprint. You have a B profile and it rejects from here and it rips straight up to the underbelly of consolidation from right at the open. Okay? What would you be wanting to do here? What if there's all this opening volume and this volume is much bigger here than this volume? But on your footprint, you get a short-term high volume area. But the opening volume is still relatively, so when you compare it to the volume that occurs here, the volume that occurs in this open is much, much bigger. What would you be looking to do here? So for me, I'm going to take out all of these notes. If we had this move, and then we had the open, and then price does this, naked volume point of control, big oh shoot. I'm walking, so I'm really sloppy on this mouse here. Part of what's fatiguing me here is that this thing is this cursor is bouncing around. It's taking me forever to do what I want, but I'm getting my walking in, and so I'm happy. But I'm also getting impatient with myself. I want to just fly through all of this and be done. But we'll look at this scenario for Monday morning, and I won't finish all my levels because, you know, we're going to gauge the interest over the weekend. If you guys start emailing me, Mike, I want to be in top whatever. Tell me what you think it's worth for me to share all my zones and levels with a trade plan. Because I am curious if people want that or not. Because again, I'm not going to share all my little specific levels, but I'll go over little scenarios like this for the benefit of everybody. Okay, so let's read this. The chirp tone. I would wait for B and C period at that point, Chirp Tone says. James says, want to pick up higher low wick, risking the prior low compression volume. Needing relatively relative volume per second and initiative buying to print on the lows of the footprint absorbing the higher low. How many miles? Yeah, I am at, let's see, enter my mode here, time. I'm at 4.62 miles right now, Pyrrhic. Targeting trap traders from the open flush for take profit. Okay, so here's my idea. We're gonna just do this one trade scenario because I am getting tired, guys. That's just the facts of the matter. Facts of the matter are, I'm just getting tired, so I'm starting to lose steam already. My kid was sick last night, so I've been up early and up late taking care of him. Like, why is your family sick all the time? They're not when they're not in this part of the country, but it's 106, and me and my kid went. We have some of the worst air quality in the United States here in the Central Valley. 106 yesterday. Me and my kid went like a bunch of in Russian you would say duraki, a bunch of fools. I know a little bit of Russian because my grandparents were kind of, anyway, we're like fourth generation here. They spoke. I don't really speak, but I know some words. Durak means like a fool. Donkey or something, I think. My grandfather used to use it all the time. Anyway, so here's the scenario for me. One scenario that I kind of laid out. All right, here's RTH. Here's price coming in. Boom, 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 boom. Big volume, okay? The volume node is like this, and price moves down, right? Doubles balance. We get balance extension. So everybody's short off the open. Covers right before here. So they cover. Let's say like this. In this area, this is the poor low. It breaks by a few ticks, and then we get a rejection. And in this area, we get a volume node that looks relative to the open, looks like this, much smaller. But we get everything that James is talking about, which is on the footprint, high volume per second, quick rejection, right? Extreme positive delta, and price screams back up. If it comes back into this area, I'd be looking for a scalp short. This would be, let's go B, B, WC. Base breakout with consolidation. Okay, right here. That's what this is. You got to put a stop up here. So you got to scale in. You go in small. Here, here, here. Stops are here. And what you're looking for the scalp is a move in and rejection back to this volume node, where shorts would be, again, from this quick rejection, wanting, typically, to cover out. So, if your average is somewhere in here, right, we're going to say your average is this new yellow line here, and your stop is here, your take profit is at 1.2 Rs, 1.4, 1.5 Rs. You get out 3/4 of your position. Your new average price for your position is somewhere on the short side up in here, this little square. Okay. At this point, you can move your stop. Your average is somewhere in here. You can move your stop, which it's a buy stop because you're short. You move your stop into here. Now, why do you move your stop here? Anybody know why? Mr. Zerwal, I appreciate that. I think so too. Actually, I know so. I know so. I'm just giving you my scenario for this. Based on the overall market structure, I'm giving you my scenario. So Mike produces, it's protected by the HVN. Yes. You are correct, my friend. More important than that. More important than that is, how do I highlight this? So this area here, all the way down, right? All the way to here, and then making a higher low. Now, if we come up here, it would be normal in a downtrend. Where remember, we're short. We're short averaged into here with the stop up here. It would be normal for a market that is trying to trend down and take out this poor low, which short term, the idea is that it was a poor low from way before, and that these players are like remnants from there, and they're like, get me out, right? There was aggressive buying there before, there's trap shorts, and yet at the open, we got big volume positioned here after a big gap down. So the general context of the market is it's gapped down overnight. We're at FOMC. The market is in panic mode still. And there's players positioned through here. And a lot of retail folk are just going to be thinking, mean reversion, fill all the gaps above. And so the greatest number of what I would call poor traders are all thinking, we got to fill gaps. We got to mean revert back to the upside. And there's all this volume here, but the FOMC say hasn't come out or anything yet. And there's all the big players positioned here, hence by this big volume node. If your stop is here, it gets taken out if this becomes a higher high relative to this rejection, where you're short and you took profit already back down against what? This rejection area in this volume node. So you're still positioned short. Now you get taken out if the structure of the market becomes higher lows and higher highs. So you're playing properly with the market. Your stop, again, this is a cleaner version of all this. Your stop is right here where it's making, see, this is the problem is I'm on a treadmill. So this, and I can't just undo one at a time here that I know of. Otherwise I would undo one drawing at a time. There might be a way to do it, but I don't know the shortcut key. And there's no quick menu. It's like a Linux program. So I don't, that's the problem that with this, doing this and making a bad drawing here. It's frustrating. Anyway. So your stop is in the higher high zone. It's also being protected by the HVN. And it's very normal for markets to make lower highs and then to trend down again. And if it trends down after making a lower high here against here, then this node, remember, there's big players here. And against all of this momentum, these players are likely protecting. This is still a low volume node. So the longs from here that get caught up, and remember, some of you are a sample size of the greater market. So some of you said, long from here, right? Some of you said short from wherever in here or short from here. But a lot of you said quick rejection, long. So you're long from here, this node, maybe the top. If we start to break into this volume node, how many of you guys are just going to cut it right here? Are you going to re-add? You're going to see this volume node on a footprint and go, oh, hey, that's a high HVN. Prior poor low. I'm going to re-add to my long. Meanwhile, the large players from the open are all positioned here and they've defended, and you're not taking the lower high Q here. Right? So if they go sell this hard, kind of like, remember on the weekly structures, what ends up happening, right? You get like gaps here, and then you get structures, and then you get like low volume in through this area, right? What ends up happening the first time we go up, the volume is there's nothing. And the second time we go down, right? There's overhead up here. The second time we go down, back to this whoosh gap, right? Now everybody's trapped. Now new volume node down here, which is where we are right now in the weekly, right? So that same weekly scenario we can use, gotta erase it all again. That same weekly scenario we can use to understand that, you know, if this is the open here, and we have all that structure, right, that created that, and then that breakdown, whoosh, whoosh, right, and then whoosh, or no, sorry, down into here, one more bounce, lower high. It's the turn. So think of it like this. Think of it like this. That's why I like to talk about trap traders. Right? It's actually something like this, right? This is the poor low. Whoosh. All right. Shoo. Shoo. And then back to, I can't even draw correctly. Anyway, lower high, now lower low. The first time we come to this zone, right? The shorts that are wrong here, get out. Let me cover near break even. The second time we come to the zone, the longs say, darn it, I'm still holding because I'm a trend follower kind of person. I like to buy here, stop here, and take profit way up here because I'm a 1, 2, 3, 4R kind of retail trader or kind of guy or professional trader, whatever. Not trying to imply if you're a 4R guy, you're a retail trader. That's not what I'm implying. But you're a 4R or 1, 2, 3, 4. Yeah, 4R kind of guy. So you're going to hold. But now, if price does this, makes a lower high, it's the longs turn. The first time, the shorts cover, break even, bounce, lower high. Then the longs, it's their turn for pain through here. Hence why, if you take this trade where you're short from here on this reversal, you cover some because you don't know the future. And you cover some for 1R. And now your average is way up here somewhere. And you can put a stop up here and it's a break-even trade. If it goes and takes out the high, it's now higher highs. But if it goes and takes out the lows in through here, this, if you take this out, is where you need to add. Because coming back to the middle of this zone, even though it may oscillate, time to clean it up again. Even though It may, when it comes down, oscillate a bit in here. If you add here, the likelihood that we go take this out is very high. Nothing is guaranteed. We know that. But explaining this move, now that we've made this lower high, right? Like that. Explaining this move relative to traders rotating in and out of essentially volume nodes like that. These are the bigger position traders. This is just a tiny little remnant. And you can explain the price action short term because of this poor low in context. Context to what? What happened now 3 weeks ago, essentially, right? It's what we're talking about is this area here, right? This is the naked volume point of control. This is the poor low, okay? And we're trying to explain it here on a short term. This is a 5-minute chart in terms of what may happen at the open. Now, this is one freaking scenario, but I think explaining the scenario can help a lot of you to, number one, take into account short-term structure. Higher highs, higher lows, lower highs, lower lows. And to trade with structure. Number two, to take into account volume profile and how the market may move in a way that the dominant traders are still in control and you can understand that. So we're looking at essentially footprint, we're looking at volume profile, we're looking at aggression, we're looking at market structure, and we're looking at higher time frame considering what is driving this price action, as well as what do some of you short-term traders who only take a magnifying glass and look at it intraday, how do you look at the market and tell yourself, this is what I want to do based on this little zigzag pattern or high volume per second or a footprint, right? And not consider the bigger picture. Now, can anything happen? Absolutely. But if you can tell, if you can kind of figure out, just based on basic market structure, what the largest players, who they want to play against, and how they're going to cover, you can actually get a good idea of how the market's going to move. Now, these little structures, these little structures that we're talking about here. Let's see, can we see? Yep, we can see this. Can you now see why it's useful to look at how this player played it? You see what they're using? They're using the structure of the market, covering, 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 removed, filled, 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 covering, covering, covering. See, we knew they pulled off. If you're like just joining and you're like, what is he talking about? Go rewind it to the beginning of the video or watch it from the beginning. We talk about the way that they pulled orders here, 160 lots, and covered into the market. And we talked about structure. And as a structure went sideways, this liquidity was pulled and probably used to cover or get long a big short position. Cover a short position or get long, whatever. I think this is a short position, and it's also flipping long. That's what I think. And I think it's a higher time frame participant making a bet. That's what I think. Just based on where they pool, like into the close and everything like that. But can you see? This is a savvy trader that as all right. as we come down and make this descending, almost, I cannot make straight lines. Anyway, here, descending triangle that eventually breaks up. At the break of the descending triangle that doesn't move in the favor. So this is a descending. So price is making essentially lower highs against a buyer down here. See that? Lower highs against a buyer down here. And then it breaks up, and notice the liquidity removed. So if you're like, big players don't look at market structure or classical charting patterns, they do, but they don't view it in the same way you do. Oh, it's a head and shoulder meme. Oh, it's a descending triangle meme. It has nothing to do with that. It has to do with oscillating, higher highs, higher lows. And if price is changing, if the mass aggregate of market participants are starting to see value by buying higher and selling higher. In other words, higher highs, higher lows. And once you do that, you use MGI, which is market generated information, to change your opinion. And you don't know the future. So the best trading is MGI, and this is how this big player played here. So anyway. Oh, Mr. Mike over here is tired. All right. Alexander says, can they cover short with the limit? Sure. Yeah. I mean, you're simply buying. So, Alexander, all positions, you're either selling more than you have on futures. You're selling more than you're buying, and then you're short. Right? So you're showing a negative number. And to close out of that position, you simply need to buy. It doesn't matter if it's a limit or a market order. Now, secondarily, not to confuse the issue, but there are no such thing as market orders on the CME. You're like, what? I have market. I have buy market in Sierra chart. I have buy market in TD Ameritrade. An order gets sent through. What I'm talking about is technically in futures on the CME, every single market order in your software is converted to a stop limit order at the price protection limit, which is on the E-mini or ES, plus or minus 3. So every single order you send to the CME is going to be converted to a stop limit order. In other words, it's going to buy higher than the best ask by 3 points maximum. Which is why when you see sweeps in the ES that are instantaneous, the maximum sweep is 3 points. Anything more than that is a cascading sweep. In other words, it triggers another stop limit to sweep another 3 points. But that's why, by and large, when you see a 3-point difference, if you guys have built in Sierra chart the bookmap style with the best bid and best ask, where you'll see the best bid and ask stay constant, and then the white price line, which is a stair step on close, moves 3 points away from the best bid ask. It's because the price moves before the best bid and ask moves because of the refresh rate of your software. And so price will move 3 points away. Best bid and ask will then snap to that level as liquidity is added to that level, but it's not instantaneous, which is why you see, if you've built that order, that chart book type, you'll see the line moves down for last price, but the best bid ask goes sideways, and then you see a big gap. And that's how I told Zip, I was like, hey, Zip, if you want to do a market sweep and you just want to use best bid ask lines, you could use that and then just put a bubble for the difference. And as long as you have a 100 volume chart, you can estimate, because the line on close are printing every 100 volume, you can estimate the total number of the market sweep that way. And then just put a bubble at the end. All right? So that's how we figured it out. Well, that's how he did it. But anyway, that's how I conveyed it to him. All right? There's probably a much better way to do it all. But, you know, me, Mr. Non-coder guy, that's how I explained it to him. So, easy peasy, lemon squeezy. Right? But what am I doing? I'm just using my basic understanding of the software without coding knowledge to give myself indicators for sweeps. Now, why do I care about sweeps, guys? Because someone generated a bunch, if they sweep the market, number one. Oh, here I am talking about the market depth historical graph and sweeps. All right, I'm already getting sidetracked. Anyway, have a great weekend, guys. If you liked the video, or if you liked what you heard today, please like the video, share it with your buddies, blah, blah, blah. And I hope you guys have a really successful upcoming week. It's going to be really fun, really interesting because of all this volatility. If you trade during volatility, trade smaller. Do not trade bigger. Trade smaller. A lot of people see more opportunity. They want to trade bigger. Indeed, you should do the opposite. Trade smaller. So anyway, have a great weekend and enjoyed being with all of you guys today. Take it easy. All right. Bye-bye.